And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
And good morning, my fine futures friends. It's time for the market forecast for Thursday, December the 8th. My name is John Hoagland. It's always my pleasure to be with you, and thank you for trusting me with your time. Looks like we've got a Hoagland-rich environment here today. It's good to see everyone. If you're already in the markets, hopefully things are going your way, but our focus here is always on finding accurate context, always thinking risk management first, and staying patient in your trading. It looks like I've got the stream going today. I did it right this morning. I had a little problem yesterday on the recap. Sorry about that. As far as economic numbers this morning, 7:30, the jobless claims numbers did come out. Initial jobless claims last week was adjusted down a little bit to 226,000. They were looking for 230,000 initial jobless claims last week. It's exactly what they got, 230,000 initial jobless claims. Now, if there is something that is going to affect the market, it's probably the lesser impactful of those, which is the continuing jobless claims, which was also adjusted lower last week. They were looking for 1,600,000 continuing jobless claims last week. It came out at 1.671, more continuous jobless claims than they were thinking. Now, when we have good news, it seems that stocks go lower because that increases the risk of higher rates and are more likely of falling into recession. When we have bad economic news, the markets like that because it's less likely that the Fed will increase rates at a higher rate and perhaps less likely that we do fall into recession. U.S. stocks are open, are going to open. Looks like they're steady to higher, maybe a little bit higher now. They were pretty much steady to higher prior to the jobless claims. We did get a little bit of an uptick after that information did come out. But investors remain focused on pending recession because it's the only thing really with the lack of important economic numbers this week. We do have another one tomorrow. That is likely going to be impactful, but there's little else to focus on economically prior to the FOMC meeting last week. Bonds continue to signal recession as the yield curve continues to remain inverted at levels not seen in 40 years. That puts us back to 1982. Now, here's a little bit of context as to what was going on in 1982. We had a very high recession, a very high inflation, I should say. And at this time in 1982, rates had fallen to 13 to 14%. The effectual funds rate was averaging that year, 1982, at 9.9%. That's the kind of inflation and how we were able to hopefully straighten it out before. So that scares me a little bit. Just kind of will give you a little context of how the yield curve was looking and what rates were the last time the yield curve was like this. Hopefully we're not going to go into that. Crude remains a bit higher as potential higher Chinese demand is leaking into the markets, and apparently we've got some stalled Russian tankers affecting supplies. So we've got a little bit of an uptick in crude oil today. We're going to take a look at all of this on the charts very shortly. A brief look a few minutes ago at the VIX, the dollar index, and the yield on the 10-year VIX is up about 0.5%. Kind of a surprise with the markets higher a little bit, but 22.79, still not a big number, but a little bit of an uptick from where it has been recently. The dollar index down slightly at 105.04, and the yield on the 10-year hanging around at 3.45%. As always, make sure you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome here on the Market Forecast. As always, I ask that you subscribe to our YouTube channel so you get notifications when we do go live. Today is Thursday. There won't be a recap, but however, we will have the podcast at 3 o'clock with Dan and Jack. We do have Make Hogue Money today right after the Market Forecast, and then we'll see how the markets treat us tomorrow morning on the Market Forecast. So again, looking forward to another hopefully profitable. We've had, I think, 3 profitable sessions of Make Hogue Money. Things seem to be going pretty well there. And we're always liking profits, right? Good morning, everybody. We got Caprice 101 first in the room. You win the prize. You know, when I talk about feedback, I mean it. If there's something we can do better here on the forecast recap, anything that we're doing, let me know. Jay Hoagland at topstep.com. JHOAGLAND at topstep.com. Bear goes long. Good morning. Lacey, everybody says good morning. Shaw, good morning. Happy Thursday to you too. Serenity Trader, buenos dias. Spencer Rhodes, I've got my cup of coffee right here. Ready to go. Joel, good morning. Tom, my brother, it's good to see you. I love you. Rooster, crowing already. Happy Thursday. Bill Phillips, Timothy Marks, Rick Hoagland, my other brother. I love you too. Sonny with a good quote this morning. If you do not believe you can be successful as a trader, then you won't be. If you think you can be successful, then you will be. A great quote from the wonderful and helpful Mark Douglas. I'm going to go one step further and say, if you already know you're a successful trader, you will be a successful trader. Spencer's got some levels marked out for a range-bound day today, which he believes will ensure that it is going to end up being a trend day. Spencer, I saw that before. I had to laugh because it's amazing how the market loves to make a liar out of us, isn't it? Got to trade what you see. Caesar, good morning. Dan Trader, Naveen, Dimitar, George Duque, good morning. Charles March, Eric Hill, Dowitzer Joe, good morning. Alfred, good morning. 120 bucks from closing step 2. Alfred, forget about that. The next trade is the only important one. Start from 0. Looking forward to your success, Alfred. Let us know how it goes. Stephen, good morning. Sarah Hall, prayers and love to you as well. Charles Hugo, good morning, Hogue, or good night for you. Wow, you're in Perth, Australia. Wow. Well, you're about as far away as you can be. Good night. Good night. Grim Reaper, Hoagie, happy holidays from Duke and Duke. Bye, Hoagie. Bye. Love Mortimer. There you go, Grim Reaper Trader. How you doing this morning, Jason? Joel MB, my mind thinks I'm still 25. My body thinks I'm an idiot. Mine too. When people ask where I grew up, I tell them I haven't yet. Chris, good morning, Nastic. Glitter Sandwich, good to see you. Good snowy morning there in Colorado. Vince, good morning. Fred likes profits, don't we all? Chudy, good morning. Main Point Bid Ideas. Good, nice to see you, Chudy. Terry King, Rob T, Chudy, good morning. Thomas. Good morning, Thomas. We got a Thomas and a Tomas. Good morning and happy trading. Keith, good morning. And Mike H, good morning. So it's great to see everybody. Thank you all for popping in and saying good morning. Orion, it's good to see you. Makes my day every morning that we get the opportunity to sit here and chat. One of my favorite things to do is sit around with traders and talk about trading, and it's wonderful that I get to do this every day, and I thank you all again for trusting me with your time. So we've got Make Hogue Money today. We are going to jump relatively quickly into the charts here, starting with the daily in the S&Ps. Let's take a look-see, shall we? All right. We added only 1,600 in open interest yesterday. We'd been losing open interest all the way down here. That's not very encouraging for a healthy downside market. The auction has struggled to bring in new business on this move to the downside. Even volume hasn't been that impressive. We all know how the downside tends to bring in big volume, but it really hasn't. I mean, we've had an uptick in volume a little bit, but nothing all that impressive, if you ask me. Now, these are, of course, my opinions, and just like Spencer, I have been wrong, and I have been, and the market loves to make a liar out of me. So yesterday, we had a pretty good opportunity, or a few good opportunities against weekly kickoff high. I think that's going to be a pivotal level for us today. Weekly kickoff low is what it is, 39.54. We're currently trading above it, looking like we're going to open above it. Taking a look at the 30-minute chart here. So there was our opportunities yesterday at weekly kickoff low. We've got overnight inventory looking a little bit to the long side here. Okay, so we've got that. I'm still thinking that we're going to be able to find decent opportunities for executions in and around weekly kickoff low here. I think it's still a relatively impactful number. It was resistant. If it becomes supportive, we could certainly see this market return to the upside. And with a little bit of bad news, that seems to be what brings buyers back into the market, right? Because we're trying to ensure that we're not going to raise interest rates too much or fall into recession because of that. So we're going to be opening above value, in possibly range. If we do manage to break a gap on this, we're going to have gap rules again. That could also create a value area special situation play, which could bring us back to the downside upon reacceptance of yesterday's area of value. Now, I got an email yesterday of somebody who is working with Jim Dalton, and Jim Dalton says he doesn't really look at the value area special situation play anymore. It's kind of, he feels as though it's kind of been invalidated, and I'm not necessarily disagreeing with him, but it's something that has been very useful in the past, and things that have been very useful in the past tend to fall out of favor and back into favor. So it's something I do keep a track of, is watching when the value area special situation play is available. And if we do open with a gap today, that makes the special situation to the downside in play, if we even get there. We have not, I think, been all that impressive as far as bringing in new business to the downside in the S&Ps. Very specific to the S&Ps. Take a look at the TPO chart from yesterday. This is the chart from yesterday's regular trading hour session. Okay, we have excess here, we have excess here, we have excess here. We even have excess in the overnight from last night. We have a weak high here. We talked about this might be an interesting level moving forward, which basically correlates very nicely with our weekly kickoff low. We've got the overnight outside of yesterday's regular trading hour range. Very normal trading day, almost. It's a very normal variation trading day because we did trade outside the initial balance. And we used up a lot of the market's ability to facilitate trade down here. What's the market's job? The market's job is to facilitate trade. If it's not facilitating trade here, price will advertise at different levels to encourage participation. And I believe that is what is currently happening now. So back to the 30-minute chart here just for a moment. Watch this weekly kickoff level here. This is, it is somehow important to us. Again, an execution could mean failure above and a move to the downside, or acceptance above and a move back to the upside. We've got lots of space up here before we really run into anything. We've got this trend line, which was the high end of the bull flag that we were looking at, and then the next naked point of control is all the way up here. So there's a lot of space up there. I don't think we're going to be doing anything that magnanimous today. because we're going to start to fall into range and into positioning and hedging for Wednesday's FOMC report. Take a look at crude oil now. So lower pricing did attract new business yesterday. We added 12,000 contracts on the downside yesterday. Volume remains relatively strong, not real big, but relatively strong. This relief rally does not change the current structure, although fundamentals may have a hand in that. Price is starting to look relatively cheap. Consider what the White House said last week or the week before, that they're going to start to replenish the strategic petroleum reserve at $70. It's going to put some real support down in this level here, don't you think? Take a look at the 30-minute chart. So we've been, adding some pretty decent open interest on the way down here. Not yesterday. We only added 500, but yesterday looks like we really barreled into some shorts down here. If those shorts are going to get trapped, we're going to have to look out to the upside. And again, I think we've got a ways to go before we're really going to break any downside structure here. What we do have, the market is holding overnight longs. It's within range and inside of value. It just opened. So we did open inside value, basically right at the point of control, a very comfortable spot for the market. If we do fall below that, there's maybe some repair that could occur inside yesterday's range. That would probably be my hypothesis number one, because we were unable to open higher. We were unable to open with a gap. We opened within range at a very comfortable place. The perception of the barrel of crude oil hasn't changed all that much. Take a look at what we've got here on the TPO chart. However, okay, we did end the day yesterday with a late spike. We are currently experiencing rejection of that late spike. Basically, the base of the late spike is settlement, 7201, but it's kind of moot right now. This late spike is looking more like excess because we've opened above it. If we do fall into repair, that doesn't mean that the market is still rejecting lower pricing. What'd the opening range do? Anything? Opening range looked higher, now testing the low of it. So no real big shakes here as far as opportunities from the late spike. We got 20 tick opening range, which isn't bad. Let's look at the NASDAQ, which, we looked at the S&Ps, which we've been saying has not been necessarily all that gratuitous to the downside with continuation ideas, right? So the NASDAQ is a different story. The NASDAQ since the beginning, since the middle of November has been range bound. It remains range bound. The S&Ps were more of an upside market state that could potentially be broken. Well, the range bound activity here in the NASDAQ could potentially be broken upon acceptance below last week's low. We've been yet to be able to do that. We added 3,000 yesterday in open interest, where we added 1,600 in the S&Ps. So a lot more, in a thinner market, a much bigger open interest could really start to indicate that we're getting too short here. Last week's low continues supportive here. Open interest continues to increase while the ES has been decreasing. A lot of the tech companies have been weak. 30-minute chart. So opening probably in range above value, overnight inventory, long. We don't have as far to go before we reach the next naked point of control here, and then weekly kickoff low is still above price here in the NASDAQ, where we are wrestling with it as we speak. So the NASDAQ still presenting as the weaker of the two. Take a look at the TPO chart from yesterday, however. An absolutely perfect, normal trading day. The initial balance is both extremes of the regular trading hour session, and the market just kind of rotates back and forth throughout the entire session. Normal trading day is a bit of a misnomer because we don't see these very often, particularly in a market as thin and whippy as the NASDAQ. We have excess on both sides. We have excess on both sides of the overnight. Overnight testing to the yesterday's high, and the overnight high, which put this huge table in over here. If you ask me, this is an important inflection level in today's trading. It looks like we're going to be opening basically right there. We're probably going to see a whole bunch of medium time frame stops up above that level. Okay, and we've got the naked point of control here and the volume naked point of control that we just saw on the 30-minute chart just above. If traders are focused on those, they will bring price there. Gold. Area of balance. Area of balance. Central in the area of balance. Central in the weekly kickoff range, and relatively central in the in last week's range. Maybe a little to the upside here in last week's range, but we added 600 in open interest yesterday. Not that impressive. Volume, however, was a little more impressive than the increase in open interest. You take a look at this, we got 1, 2, probably 3 points of contact. We got 1, 2, 3 points of contact. This market is in a coiling state. It's building energy. Yesterday, when I said I have a feeling that there's something larger going to happen in gold, we did get a pretty decent up move, but that's not really what I was thinking. I was thinking more of a breakout outside of this area of balance. I have no idea when it's going to happen, but I think the market is setting up for it because of interest, because of the technical situation. We did lose 3,800 in open interest down here. Long liquidation yesterday, adding about 600, nothing tremendous, but there's something is amiss here at the Circle K. Take a look at the 30. So we had our pretty decent opportunities yesterday. This morning, overnight inventory a little bit to the long side. It looks like we've opened with a gap. If we've held the gap, we'll see that here on the TPO chart shortly. Kind of looking at no overnight inventory at 6:30 or 6 o'clock when I was sitting down here to start working on all this. We were in range and above value. We are now above range. Are we going to continue this move to the upside? We've got one naked point of control up here. I haven't put that on here yet. I'm going to go ahead and put that on while we're chatting here. This could be a relatively easy visual target for us to bring price to. It has not been rechecked in overnight inventory. It has not been checked in regular trading hours, I should say. Here's the TPO chart. So we have kind of weak highs and weak lows in this profile from yesterday. This is last night. This is yesterday. This is today. So we have closed the gap, but we have rejected value. We have closed the gap from the overnight and rejected value from overnight as well. We do have a naked point of control down here and another volume naked point of control up there, down there. There's all kinds of things for this market to be looking at. Trade what you see today. I'm not all that sure that what I'm expecting at some point here in the near future is going to happen today. Here's the euro, the dollar index off a little bit this morning. pretty good longer time frame upside structure, a little bit of acceleration here. We got a couple 3 points of contact here. We got some contact here. The auction to the upside here in the euro certainly seems to be doing well, especially after finding out that yesterday we added another 15,000 in open interest. Volume's waffling a little bit, but we're still showing a lot of overall interest in increasing contracts. We're in a short time frame area of balance here. I'm going to call that last week's high as the upper extreme of that area of balance, somewhere down here at the bottom of these candle bodies, 104.70. The low end of that area of balance. We seem to be stuck here a little bit. Take a look at the 30-minute chart. Okay, we had a bull flag breakup, but where's the momentum? Where's the momentum? No overnight inventory, no runs, no hits, no errors, no rush to get into anything this morning as we are in range and value. Better trade locations are more likely to happen as the day goes on. Here's the TPO chart from yesterday. This is yesterday's profile. Okay, basically doubling the initial balance. Excess at the low, excess at the high, opening here. We got to just chill. Look at how range bound this looks. Just chill. Focus on the extremes. Extremes up here or down here. You're still working with a poor low here from Tuesday. We do have excess below that though. 10-year. Boy, we had a pretty good move yesterday that I did not believe the late spike the day before, but boy, it sure did prove to be true. We've got good upside structure. We lost 20,000 in open interest yesterday. We had a short covering rally. It's a P-shaped profile. We squeezed some shorts yesterday. Hope you like short juice. I prefer orange juice myself, but in the okay, we're kind of heading the other direction now. So rates kind of maybe taking a look to the upside, and we were in range, we were in value. No real overnight inventory I was thinking about. Here's, you can see this P-shaped profile. It'll look better on the TPO chart. P-shaped, short covering. Low excess high, high excess low. Here's the late spike that we didn't believe yesterday that ended up bringing buyers in and on the rejection of lower pricing. And we've got a nice little island created here in the natural gas. The entire weekly range remains that island. We're falling into balance. I mean, really, the focus that I'm going to have is the extremes, but I think we're starting to fall into short time frame control here. We lost 7,500 in open interest yesterday. Short covering. Here's the 30-minute chart. So we lost a whole bunch of open interest on the short covering. We checked 2 points of control yesterday, this one and this one. We've opened with a gap. Rules are, if we open with a gap and can't close the gap relatively early, we look for opportunities in the direction of the gap, which would have us looking for potential longs. Take a look at these candles here. Very indecisive in this area. If we're in short time frame control, we're really at the high of the regular trading hours for this week. I'm so interested in this market and so thankful that I don't trade it because it can be very vicious. So if you are going to be trading it today, trade what you see. I mean, the gap says we're possibly accepting higher pricing. If we're going to close this gap to close out the potential island low, we're going to have to trade up to here at some point this week. Basically, weekly kickoff low, I think. Yep, weekly kickoff low. All right. All right, so Joe's got his hypothesis here for the S&Ps. Trade lower to DPOC 42 because we're holding above value overnight. Looking for long to trade to volume trigger gamma level 4,000. Balance above value area high 45 and 40 for the 4,000 for the day. Thank you, Joe. Looking forward to seeing you at Make Hogue Money, hopefully. How do you anticipate chopping indexes during rollover? How would you approach your trades? Very carefully. I know that there's a lot of discretionary traders back in the day in the trading pit. Discretionary traders that would just take the 2 weeks of rollover off. I don't have that luxury, but I am very cautious because rollover. There's a reason why they're so challenging is because the longer time frame traders are more interested in getting a cheap rollover done than being directional. They can be forced into directional trading, but they'd rather work on getting a cheap rollover. All right. Thank you, Fred, for trying to answer those questions. Thank you very much. All right, let's take our deep breath. Stay humble, grateful, and creative today. Looking forward to seeing everybody for Make Hogue Money. Stay kind to yourself, kind to others, and say a prayer for peace. If I don't see you at Make Hogue Money, have a great trading day. I won't see you for the recap today, but I will see you for the forecast tomorrow. Take your time. Be patient. Stay centered. Look for the right opportunities. Let them come to you, and I will see you shortly in Make Hogue Money. And again, if not, have a great trading day. Blessings to you all.